Something else that people do, especially with higher interest rates now than what many people have at the moment, is to continue to co-own a property for a period of time. You can agree and write into the settlement agreement that one spouse will be responsible for the payments, the expenses, the debt, and that they are going to stay there and take care of all of the utilities, all of the upkeep, etc. The other spouse is going to, though, remain on title and remain on the mortgage, because if they were to come off, it would trigger a refinancing, requalification, and that other spouse might not be able to do that on their own. So by staying on the mortgage and title, that allows the spouse to continue to stay in the home. None of the terms change. The mortgage amount's still the same. It's paid out over the same period of time. And maybe the two of you agree that in a year or two, when mortgage rates might be more favorable, then you consider refinancing the home. Even then, you can agree that whatever you wrote in the settlement agreement, you want to extend that. If it is clear that the rates aren't there yet, but maybe you sense that they're coming, you can hold on to it for another year, 6 months, whatever the two of you agreed to. So the upside to this process is that one spouse is able to stay in the house, the kids or whomever, there's the stability for them. You can do this with a buyout. You can do this with a deferred sale. It might be that there's been an exchange of assets already, so that the spouse staying owns the house for all intents and purposes, and the other person just remains on mortgage and title until the refinance can occur, or the mortgage can be extinguished. One of the complications that can arise from that sort of situation is the spouse who is staying on mortgage and title but not living in the home. They have a high debt-to-income ratio. That mortgage, even if they don't have the legal responsibility for it, it still is in their name. And so if they were intending to buy a property, finance a property in the next couple of years before they have come off of that mortgage, they might not be able to. So it's a unique situation. It requires one spouse to be comfortable with the idea of renting for a period of time. And it requires a commitment of both spouses to staying in that home. Now, what happens if you want to have one spouse in the home and discover and learn if you can do that easily? So one of the considerations is to call the mortgage provider and ask them if the mortgage can be assumed. Assumption means that one spouse can come off of the mortgage and the other one can stay on. Now, there are varying degrees of assumption. For some lenders, that means that automatically none of the terms change. They're going to keep the same interest rate. They're going to keep the same, number of months remaining in the mortgage. Others have a kind of a modified version of that. You're going to have to demonstrate that you can qualify for the loan. You're going to perhaps have some amount of a refinancing. It's worth a call. Understand what your options are ahead of time. If you can assume a mortgage, if there are going to be no additional costs, no qualification process, no refinancing, that's going to give you the most options. You can then decide which spouse is going to stay in the home or if you're going to sell it. If an assumption is not possible, then you have the options of a deferred sale or maybe one spouse staying on the mortgage or title. And it might make sense at the end that the asset is sold. The cash proceeds can be split between the two of you. It's a fresh start. It's also a clean break sometimes. People always want that sense of security from knowing where they're going to land, but sometimes people don't recognize that there are a lot of memories from that home as well that maybe they cherish some of, but maybe they don't want all of. So thinking through if you want to be in the house, if you can afford the house, if it makes sense. Obviously, you've heard the term being house rich and cash poor, and that's a very real consideration. It's one thing to be able to assume the mortgage or to work with your spouse to stay on title so that you can stay in the house, but then it's another question entirely as to whether you can afford the house and whether that's a good idea. This is where cash projections, cash flow projections can really come into play. because as you have worked through the disclosure process, you've identified your monthly expenses and your income